Hi, and welcome back to your daily market podcast. My name is MaryKlaire Pelk. I'm the Director of Operations for the GCU Finance and Econ Club. I am here today joined by Charlie Hurst and our special guest, Jaron Castellanos. Why don't you guys go ahead and give us a quick introduction?
Yeah, I'm Charlie Hurst. I'm also the Director of Operations. I'm a freshman here at GCU.
And I'm Jaron Castellanos. I'm the Executive Director for the Finance Economics Club, and I'm currently a sophomore as well.
Awesome. As per usual, today we will be going over the overview of what happened in the market today, as well as giving some tips and tricks for starting out investing, especially for college students. Overall, today was not a very good day in the market. The S&P was down 1.74%. The Dow was down 1.01%. NASDAQ was down 2.38%. And the S&P actually logged its worst day since January. Go ahead and give us your insight on that.
Yeah, so I did see an article today about the NASDAQ facing a correction. And for anybody that might not know, a correction is when an index faces a 10 to 20% decrease over a short period of time. If it falls below 20%, it's declared a bear market. So that was pretty interesting.
Yeah, I think, zooming out when you look at the macro market, macro is the big picture, things that are happening, right? As MaryKlaire said, she was referencing the S&P as well as a lot of these big issuers. You have the NASDAQ as well as the Dow. And the S&P is the top 500 companies, as well as the Dow is a lot of the industrials. And then you have as well the NASDAQ, which is a lot of the big tech companies. So when you have these huge markets that move all of a sudden, right? You hear 1% out there and you're like, oh, it's only 1%. But in reality, the amount of volume and impact that has on the rest of, the stock market is really tremendous.
Yeah, and you talk about like a percent. I mean, the S&P was down 1.74%. That's almost 2%. So if you think about it, the S&P averages 9% a year. That's more than a ninth of what an average year return is in the S&P, and it was down that much. So it's got a ways to recover if it wants to continue the trend for this year.
Yeah, so all of these certainly have quite a few implications for the economy as a whole when you look at it in a big picture. And I've heard a lot of discussion of whether the U.S. economy is headed for a hard landing or a soft landing. Do you want to explain what that is and your thoughts?
Yeah, totally. I mean, think of the market as kind of an engine that you're driving, and you're driving this car down this road essentially. And at some point we've noticed AI really boom, as well as recently as well industrials. And the idea of the hard and soft landing is at some point the market has to come to a halt. It's been growing tremendously throughout these last few years that we don't think this momentum could keep going, and we think that it's going to come to a stop. There's going to be some correction, and the market is going to rebalance itself in that way. And the way that it rebalances itself is it's either going to, completely go to where it should be immediately, or it's going to ease down there slowly. Now, what does this exactly mean? And, how are people pricing this in? If the market were to completely explode or pop, like 2008 or, all the way back in, 1980s, right? That is going to be a really hard landing. Whereas you have other situations on more on the soft landing side where you see the market go up, you see it slowly, gradually come down, and then it starts to build itself back up. When you look at how are really big firms pricing this in, one thing that I think is really important to mention is that JP Morgan thinks that there's a 1 in 3% chance of a recession coming pretty soon, as well as you also have Moody's thinking that it's closer to 50-50. So when you look at, what are people thinking about the market, there's a lot of uncertainty as well as a lot of volatility within that.
Yeah, so within that, we got to think about the economy and what controls the economy, which would be the Fed and rates and all of that sort of stuff. It's a very important topic for people to understand, especially in such a volatile time. Charlie, would you like to touch on that for us?
Yeah, so the Fed recently had its last FOMC meeting. I think it was last month, and they decided to hold rates steady. So that means that they're not going to be cutting anything, which would increase short-term inflation, and they're not raising it, which would decrease short-term inflation. Instead, they're just keeping it at that same rate. And I think they did that the last meeting as well, if I'm correct. I don't know. But If they did cut it, that would be very bullish for the markets in a short-term time frame, just because there's going to be a lot more money flowing into the markets in that short time frame. It will allow businesses to take out bigger loans and grow their companies faster, as well as consumers, like 20 to 40-year-olds who are buying a home for the first time. They're going to be able to take out a bigger loan, or even a loan for a car. Sorry.
Yeah, I mean, what are interest rates? Kind of breaking that down a little bit too. I know for our average listener, whether you're in college or just getting into investing, this may seem like a foreign language to you. Finance, I feel like finance is a language as well, but it can be a little daunting. So to kind of break that down a little bit from Charlie's points, interest rates really control the economy. Everyone thinks that it's all about looking at the S&P, and those are major market movers. But when you look at the fundamentals of loans and investing in interest, it really comes down to the Fed. The Fed issues out rates to banks, and basically those banks will take those rates and lend to customers. We call this the risk-free rate, right? Because there's no risk, because if the government doesn't pay back its loans, we have bigger problems in the economy. So the government rates are sitting roughly right around 3.5 to 3.7%. Now this means that if you go get a loan, they're going to charge you 3.5 to 3.7%. And now this plays into the overall economy, because in order for companies to make a good return or get investors to put money to them, they have to guarantee a return above that to justify the risk. Now, with this happening, you have a lot of Goldman as well as JP Morgan and all these other people thinking that rates are going to get cut. When rates get cut, that's basically the Fed telling us it's time to put money into consuming. It's time to consume. It's time to go out there and increase, the economy essentially. Now, this is important for us as your average consumer, your average college student, because if rates get cut, that doesn't necessarily directly impact you. But however, you may see that there's going to be, changes in gas prices or changes in groceries. Companies are going to be able to offer, less gains for you. So that's a very important thing to, keep in mind. As well as when rates go up as well. That's a whole other conversation which we can get into as well. But I think it's pretty interesting in the spot that we're at right now.
Yeah, definitely. So all of this happens within the U.S., and there's obviously a lot of factors within the U.S. government and the U.S. economy that drives things for us as consumers. However, there's also a whole other factor of the global picture that affects us, especially with what's going on right now in the Middle East and all of the wars and all that sort of stuff. It affects oil prices, and everything down to the gas prices are also affected by that. I would love to hear your guys' thoughts on how this is all affecting us right now.
Yeah, for your average day college student, whether you have a car or not, obviously there's ways to work around the gas prices right now, such as taking an Uber or a Waymo, which we have at our disposal in Arizona, thankfully. But I think there's ways to save money on those Ubers or those taking a ride share like that. But yeah, the war in the Middle East obviously directly affects gas prices. As we've seen, they've rose a lot over the last couple of weeks.
They really have. And the whole war situation is a very interesting time, because, you have Iran and, Israel going at it, as well as the U.S. now getting involved. And, you see a lot of these, ship carriages, kind of getting bundled together, and they're at a halt, right? There's no movement happening right now, based off from what we've heard. And I think what's really interesting is when you look at the price of oil shooting up, right? It's what is it, close to 100 right now for a barrel? And I think it's pretty interesting to see that trend, right? I mean, I remember a few years ago when, there wasn't really, they'd have to pay you for futures contracts, and now contracts are pretty pricey right now. So it's an interesting time in that sense. I think for, the broader consumer or the broader economy, I think it's important to realize that, oil is gonna fluctuate. Thankfully, the U.S. doesn't necessarily rely heavily on, a lot of oil in the Middle East, right? More so in other spots of the world. But I think it's a very important time to see just how much other economies, as well as other parts of the world, can make an effect in America.
Yeah, and I think one of the long-term effects with oil too, obviously we have seen President Trump sign executive orders when he first came into office about fracking and drilling our own oil here in the U.S. So on a long-term time frame, I think we will see oil prices start to slow down and come back to around like a $50 range for a barrel. And I think with the war in the Middle East, as well as with Venezuela, I think we will make a deal with them to where we take a certain amount of oil from them to end the confliction with them. And I think that'll obviously make oil prices go down in the long term.
Yeah, so obviously all of this is a very big picture, but as we can see, it all does trickle way back down to the consumer and specifically us as college students, which is why there's such an emphasis on being smart with your money, which comes to investing and starting off investing, which is the topic of our episode today. So what would you guys recommend to somebody who is just getting started in investing, just has no idea where to start and wondering where they should put their first small amount of money?
Investing is such an essential part of, I think, building wealth over time. And I also believe that being at GCU, it's a really great environment to not only be surrounded by amazing students, but also amazing resources as well.
Yeah.
Thankfully, there's a lot of things here on campus, if you do live on campus, to get plugged into. We have our Money Mentors group inside the Colangelo College of Business, as well as our student services, as well as a lot of different events going around to really, really help students build that foundational knowledge. I think there's so much out there on YouTube as well that you can learn from, but it's really just being passionate about it. Obviously, the numbers can be very daunting at times, but I think simply going out there and finding companies or organizations that you really believe in, right? I think it's as simple as that. You hear a lot of the time investors mention things like competitive advantage and moats, and I think that's very important to look at. But there's also experts out there that have already done the work for you. They've already found all the companies that they think are really, really good to invest into, and you can listen to why they think that. And I think finding people that already have done the work for you, that you can believe in and that you trust, is a smart way to go about it as well. The best one of the things that I heard is Warren Buffett. He always says the best investment you can make is in yourself. And I think that whether it's investing into the market or investing your time and effort into your knowledge, I think that's the foundational level to that.
And one thing to touch on there about YouTube, YouTube for investing is very risky. There's definitely going to be some people that are telling you to buy certain stocks, or this company's going to go up 300%. One of the guys I really like to listen to and watch is Dave Ramsey. He gives a very unbiased point of view, and he really breaks down everything and has a ton of websites that can help out investors even when you're young. And there's a lot of scenarios where he takes phone calls from younger people as well, and he just gives them advice. So those are really good key things to listen to.
Yeah, you mentioned a few experts, like going to get your advice from experts as well, Jaron. Did you have any recommendations for our viewers?
Yeah, I think some great spots. I'll mention them again. The Money Mentors, obviously they do a great job at really just providing that foundational level of I guess stewardship and knowledge. I think some other people to look at though are there's articles all the time coming out from J.P. Morgan, Goldman Sachs, right? You have the PIMCOs, Guggenheims. Those names may just completely fly over your head, but those are some of the biggest people and characters inside of the finance world. And I think learning about them, as well as learning how they invest and why they invest and how they invest, is so crucial. Yeah. And a lot of the time, I think it's more finance for dummies, right? Trying to boil it down, trying to understand what these complex terms mean, and really finding that really unique aspect of like, okay, this makes sense. This is, the path that I'm going on, and I actually feel good about an investment that I'm going to make. Yeah.
And also, touching on that, like if you're a new investor, I would say stick away from buying a single stock right now. I would say look into something like the SPY, which is an a ETF that follows the S&P 500, or a QQQ, which follows the NASDAQ. Those are really good ones to look at to start with, just because it's not an individual stock, so it won't be as volatile. You won't see like a 10% decrease in a day or a 10% increase in a day. You're sticking to something that's a lot less like gambling.
Yeah, definitely. It's very important to do your own research and understand where you're putting your money. But fortunately, we have so many resources out there right at our fingertips that can help us make the right decision. One thing that I commonly hear from college students is they'll say, I'm young, I'm in college, I don't have much money, I'll just start investing later. And that can be a crucial misstep in building your wealth and portfolio for the future. And there's some very specific reasoning behind that. Would you like to touch on it?
Yeah, I think compounding is the term that kind of really intercedes that statement. One thing that I love to point out is I think with anything in life, I think people overestimate what they can do in a year and they underestimate what they can do in 5. And I think that's a really good point to bring up because, if you go out and you want to get good at a sport, let's say it's football, right? If you go out and you practice for a week, you may get a little bit better, right? If you practice for a year, you'll probably be, good enough to maybe make your JV or varsity team. But if you practice it year over year over year, those skills compound and, you improve on the little things. And then you start to get a really good picture of, your football and your skills and your abilities. And I think the same thing goes with investing. Going to it a week, a month, even a year, I'd say you're still going to be learning so much over time. And the market changes so much.
Yeah.
There's always something to learn, not just with how markets move, but with, what makes a good company, right? And I think that that's a very good point to bring up, Charlie. I'm not sure if you had any additional thoughts to that.
Yeah, I think no matter if you have like $10 in your account right now, if you just put $1 into something and put $1 in the next month, it's just good practice. Like you'll get a better understanding for the markets, and it's really just about getting reps and seeing what these markets do, figuring out what patterns they follow, what affects them. It really doesn't matter how much money you have. You can look at a financial calculator on the internet and get really a big feel for how much like a $200 investment a month can really impact your future gains. And even like a $10 investment a month, it can really impact how much money you have in 20, 30 years.
Yeah, definitely. I believe that wraps up everything that we aim to cover today. Thank you so much for tuning in, and I hope you have something to take away.
Thank you.
Thank you.